following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 23rd. Terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I do want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, hey, no problem. Let your fingers do the walking. Send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show right now. The flat market, basically. The Dow's up 13, S&P's up 5. NASDAQ's up 48. I guess not flat in the NASDAQ side of life, up 0.7%. Semis are up 0.5%. That's 7 points as well to the upside. Gold's up 5. Silver's back 6 pennies. Light sweet crude up 12 cents. Natural gas, a big move, about 3.5% to the upside today. Priceline.com is the leader in the clubhouse, up 33 buckaroonies. Amazon's up 22. Netflix is up 21.91. ResMed up 13. Lending Tree up 10. All those are decent percentage moves to the upside. To the downside, it is Coherent Inc. off $11 and change, 4%. To the downside, China Lodging down 6.5%, or around 11 bucks. New Oriental Education down 9 and change. That's about 10% to the downside. So some big movers, or some movers to the downside as well as to the upside. Of course, I want to look at what you want to look at. That means going back to yesterday's show, towards the end, we had somebody let their fingers do the walking. Two guys. I think it was Mike, and it was the XLU. We'd gotten to one of the ETFs he was looking at. So let's go take a look at the XLU. Let's knock that out here. And what Mike is looking at is getting into a long position inside of the XLU. So, Mike, here's my take on, are you looking for an entry price, or, both, I guess. Maybe how about just the signal that, you know what, because of the move down, that what we see here is, okay, now is some type of pattern completion. And when we take a look at this chart here, this is my daily chart for the XLU. There's several patterns that I like to take a look at for something that's completed a move to the upside or to the downside. One of those patterns could be an A to B equals CD pattern. Okay, do we have one here? Not really well defined. You know, there was never been enough of retracement, in my opinion, to really, here's the A to B equals CD pattern that you would draw here. And it just, it's really to this and then up to here. It's no retracement, a 15% retracement. And if that's the case, and if that's the A to B equals CD pattern that you would want to draw, then the answer is no. There's no buy here. This thing's going to head down to 47.80 or so. But I don't really call that a true valid A to B equals CD pattern. Just not enough of a breakout there, counter trend rally in the middle of the move for me to really draw that pattern. So we don't have that. We can see that from the high that it made, that's back out here. Oops. What did I do there? I can just get rid of that. Okay, great. We can see from the high that formed out here, the trading day was November the 15th. You've got 6 wave counts to the downside, letter F. We prefer to see 7 waves, singing in the key of G out there, so we don't have that. We prefer to see price moving lower, doing less relative energy. I don't have that pattern out here. Maybe you could go with a TD sequential count. That hasn't occurred yet either, so I don't have any of those signals. What we do have, and what it is trying to do, that being the XLU, this is the first day thus far that we have seen price close above Stevie's red line, quite frankly, since November 30th. So that is a short-term positive. So it's got potential, right? Maybe this is not going to be one of those Stevie patterns that I like to see unfold before something bottoms or tops out here. In this case, we're talking about a bottom. But here's what I would be looking at, Mike. We saw that today the bounce took price all the way up to the top of that daily box. This box formed, looks like 4 days ago, the top of which is $50.86. It is a bearish profiled or bearish structured profile. What I mean by that, let me turn price off of it. That's the left-hand panel chart that each of you are looking at. If you're watching this on TigerTV, you're going to see that the center line of the box, there's going to be 3 lines, okay? The top and the bottom, that's easy to distinguish. And then the line that's floating in the middle is what we'll call the center of the box. When it's closer to the top, what it does is it gives you a pricing area and defines who's got control of the ball, so to speak, who's got control of price. And in this case here, it is sellers that are in control. The snipers, the sellers, they're sitting around 50, 86, 50, 66. When the bulls, let's say, are able to overcome them, and overcome means closing above the top of that, then that's an indication of a change in trend that could be underway. There's no guarantees in life, but boy, that's a pretty good one. So being above Stevie's red line says, okay, 1 in the checkbox plus level. I would say for you, if this is a turn and there's a nice bounce that is due out here, then I'd be patient and I'd wait for price close above 50.86. Otherwise, wait maybe for that 7th wave move to the downside. So that's my take on the XLU. We had John, I believe, that was looking for an entry point into Nugget. So let's go take a look at the dark chocolate covered caramel nugget out here. Now, to be fair, John, I have 2 positions inside the nugget. One, and it's trading right now at 32.91. One's in the 27 area, low 27s. The other's in the low 30 or the 31-ish area. We're trading at 32.93 out here. Regardless of my positions and my entry point, or possible entry point. Let me get rid of this A to B equals CD. If I was going to give you advice as to where an entry point might be, it would be to say 30.91 to 31.56. Now, the low of this morning was right around 31.56. What was it? It was 31.63. So sometimes you have to use these things as guidelines. Now, this is a bullish structured box. But we really don't take our cue on the nugget necessarily from it and its market profiles. We'd really kind of prefer to look at the GDX or maybe the XAU or maybe the HUI out there because these triples can maybe sometimes provide us with not as accurate information as the, in this case here, as the singles. Tarpon 2, my chart should be up. I don't know, I'll have the control room check on that for you, but they should be up, and maybe somebody else in the den can give us a thumbs up. Yeah, and maybe you got to reboot. I don't know. But we'll be back from this quick break in just a few. Achievers rise above the rest, and when they see an opportunity, they take action. Massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, from 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, and why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're going to kill two birds with one stone out here because Kevin wrote in about the Nugget and the GDX as well. And, of course, this question here came from John yesterday, and he's trying to get an entry point into the NUGT. And it may have occurred this morning. I don't know. Let's take a look at what needs to occur in order for that to have been the case. And I'd say, now would be fine where it's trading at 32.89. I'm not saying to do that. Okay, let's just kind of step through this here, and here's a reason of caution. So I'm going to ask you to, if the XAU does something certain, then I'm going to say to you or suggest to you that okay, the momentum train may be back in play, and therefore go ahead and punch a ticket and jump on board the reading. In the reading of this chart, it goes like this. Oh, I got to grab the right chart. That's the NDX. We can come back to the NDX, but the first thing with regard to a magic trick is actually having the magic out here. And the magic trick here with regard to the XAU, here's the good, the bad, and the ugly. First of all, when the XAU formed a nice bottom out there, that seventh wave move, that was nice. Recently, the top that was formed out here was with Stevie's price relative strength divergent pattern. Did it to the T, price stretched to the upside, created a bearish reversal signal. You'll see that's identified as a bear sash candle. The very next day, you have follow through down below Stevie's red line. Now, I'll tell you, it made my sphincter muscle tighten just a tad seeing that, because I'm like, oh, no. I know what this means here. It means a bit of a pullback. And what you can see is that, in essence, price has continued to find resistance the last 3 days at Stevie's red line. Now, this may be nothing more than a just simple consolidation-ish type move to the a sideways-ish type consolidation pattern. That's what's in play right now. Dangerous, though, because it does have a short-term topping pattern. And what I would suggest then, John, is look, if price in the XAU closes above Stevie's red line, that would be 88.47 as we speak right now. At 4 o'clock, it's going to be a slightly different number. Tomorrow will be a slightly different number as well. But you can use 88.50, let's say, as a guideline. Then the entry point would have been this morning. Otherwise, and here's the bad side of it. The bad side is that the bounce that we've seen thus far in the mining equities has found resistance at Stevie's red line. It is not what you want to see from the bullish side of the trade. Doesn't mean the move is over. Doesn't mean my entry point in 27 is necessarily a bad deal out here. It's just one of the things you want to see. What else do you want to see to say, okay, mining equities, gold, silver, should be ready to move to the upside? Well, let's take a look at this chart here. This chart here, the top panel shows the daily time frame for gold. The center line is for the U.S. dollar index, inverted, so a weaker dollar is moving higher on this chart. That way, visually, you can take a look at it and say, hey, what's the correlation look like? And the bottom happens to be yen futures out here. You know, that dance that had been going on and still slightly going on for so long out here. And so what we can see is the U.S. dollar continues to weaken, or does it? The yen futures are getting stronger, so that is good for gold. So the patterns are very similar. Now, I said, is it going to get stronger out here, or weaker, the U.S. dollar index? Well, let's draw a line. Now, this is inverted. And you know what? Just not to confuse you, let me do this. Let me come back to the U.S. dollar index. I won't be confused, but somebody might be shaking their head saying, what the heck is that guy saying and doing out here? Let's get rid of it. Well, I can't get rid of this A to B equals CD pattern. Remember we took a look at utilities out there, and I was hesitant to say, you know, today's the day because there was a bottom that was put in because we had a bullish reversal signal because we couldn't really identify an A to B equals CD to the downside. Well, in the U.S. dollar index, it's easy. Now, we're looking at the March contract. So many of you might be looking at a continuous contract. You're going to see different numbers out here. But we're looking at basically we're looking at the contract that's being traded right now. You can see a clear A to B equals CD pattern. You can see three different price projections: 1 to 1, 1 to 1.272, 1 to 1.618. Not to talk too fast, but here's what occurred at the 1.272 level. It was on January 15th, and that is a hammer candle. Now, that hammer candle at the completion of an A to B equals CD pattern says, okay, it has made a bottom, meaning the dollar index would move higher. Could, shoulda, woulda, maybe puts pressure on gold, maybe puts pressure on the mining equities. In fact, probably does both of those out there. So today's an important day because we have seen the low of that hammer candle tested several times. Now let's use a red line out there. Let me come grab a red line candle, because this is going to be another red line that you want to be paying attention to. Price-wise, it's going to be 90.01, 90.015 to be exact. Hey, you can test the bottom of a candle, of a hammer candle, and close back above it. That's a failure. That took place on January 17th. And that was a bullish candle, bullish engulfing. Engulfed the prior session out here. We can see the other test. Today is another test. If it can't bust out the hammer candle, because you know the expression, if you're long, you're wrong. Okay, when you take a look at a hammer candle out there, when you break below it, that's what you would want to see in order for gold to move higher, silver to move higher, presumably, and the mining equities. And if price closes back above 90.01 out here, you've got another rejection. I can tell you it's very clear where the bulls are lined up. Doesn't mean they can't get run over. But I would be saying you don't have, it closed below it, then you have another confirming signal out there. I don't mean to belabor this, but I'm just trying to explain it thoroughly so that you can kind of get the gist. So we're at this, we're at an important inflection point out here, and that makes it a little bit more difficult to suggest to you, John, to go ahead and get into the nugget right now. Rather have something more definitive. Like, hey, it was very definitive the day that we entered our first position in the mining equity. Then when we got some other signals, we added to those positions out there, knowing that we had the comfort of good profits already in there. So if I needed to average a few things together, so be it. So those are the things that I would be watching in order to go along. So that's for Kevin. That is for John out there. And maybe, I think there was another message that came in from Tom, and Tom wanted, what, silver maybe? Let me go back here and take a look at it. Tom, yeah, so good afternoon, Steve. I entered a long position this morning on the USLV. Just wondering your thoughts on silver in the next month or so. So we've covered some of this, right? Taking a look at the U.S. dollar. And when we take a look at silver, let's come take a look at profiles, okay? Let's do this first, Tom. Go take a look at the long-term profiles, or not long-term, the different profiles for silver, 60, 240 daily and weekly out here. Now, It is the weekly profiles that thus far saved silver this morning. 1674 is the number, right? This is the left-hand panel screen that you're looking at. Yeah, let's just go ahead and expand it. So if silver closes below 1674, what I would say, Tom, is your entry into USLV was wrong. Right now, it's right. Price is trading out at 1691. So, I don't know where you got in at. Price needs to clear 1748 out here. It hasn't done that for quite a while. But right now, the levels to be watching, 1674 and 1748 to the upside. The other issue that silver has, look, long-term, and I'm talking long-term, I am very long-term bullish the metals, especially gold. I'll show you one last thing that Tom needs to consider with regard to the silver trade when we get back from this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. So, Tom, the last chart that we're going to take a look at here, this is the silver chart. And here's what you don't like, the action today. And that action today, again, just consolidating sideways. So that's okay. I know you're also short-term trader out there. Here's what you don't like. Number one, with regard to the A to B equals CD pattern drawn, that has to be redrawn. We made a lower low today. All right, so that's one item you don't like to see. In other words, silver made a slightly lower low than the trading session on January 16th. Slight nuance. Well, now we have some what looks like lower highs, a lower low. Never a comfortable feeling out there in an uptrend. We also have silver trading below Stevie's red line. This is day number 4. In each of these 4 days, prices tried to get up over it and can't. Now, price can continue moving sideways, but you can also get a huge flush of the toilet. And that huge flush of the toilet, where's that going to take it down to? Well, we go back to, that's a great question, because with regard to that flush, so to speak, that could happen. We're below profiles if that occurs, right? We took a look at the 1674. The next target would be the bottom of the daily, which would be 1651. Maybe that is the eventual, maybe that's the message that silver is providing to you and I, combined with the fact, is the dollar going to break down or not? Closes above the low of that hammer candle. Actually, I don't even know if it has to be the low of that hammer candle. Let me go back, because the question is that bullish engulfing candle that we looked at, was that an even lower low? It was. So let me I want to give you the correct number, because that bullish engulfing candle that occurred the following day, that too is a level of support. So I don't want to misstate things. I really don't. So right now, you can see that you've got a rejection of a bullish signal out here. The low of that session. So dollar-wise, in order for there to really be a break, which is one of the things that the metals are looking for, the dollar has to close below 89.96. And we're trading above that right now. So you have another rejection of a bullish area. And if this turns out to be an A to B equals CD, well, then there's then you're just simply coming back, at least at this stage of the game. And yes, that would probably mean that the euro would pull back a bit out there. It's had a heck of a run. We all know that. And the U.S. dollar index could easily bounce up to 91.72, 92.88. And it could still be in a bit of a downtrend out there. So you really need to see that U.S. dollar index break through support, and it just is not doing it. Now, in order for that U.S. dollar index to get its mojo out here, it's the continuous contract. Let me see if I can switch this up here. Give me a moment. We're going to try to get Stevie's red line on the March contract, okay? Let's do that. Let's give you the real deal, the real number to be paying attention to. And it looks like it's going to be $90. This doesn't have today's activity. It may fill in the next few moments. But right now you'll use 90.57 as the number. So I'll keep an eye on this chart here during the show. But right now, if the U.S. dollar index has really completed an A to B equals CD to the downside, the confirmation, my opinion would be, because we've gotten the bullish signals, would be a close above Stevie's red line. That looks to be 90.57 or thereabouts as we speak right now. So, Tom, we're just happen to be into Tom, to John, to Kevin. We just happen to be in a time here where the direction really isn't that clear. A couple of these things get broken through, and it'll be much easier to answer your questions with regard to what these commodities want to do out there. But anyways, thanks for writing. Always appreciated. Let's take a look. KJ, he writes in here. Oh, wait, before I go to KJ's question, Adobe is what he's like. Let me nope, I can't. I just got to remember to come back to this question. Let's go take a look. We had March. We had Marriott. So one of our dinners is inside of Marriott and was asking, where is this thing going to top? Or is now the time to sell? Well, I don't know where you're in at inside of Marriott. It's looking mighty darn good out here. It's trading out of 145.56. It's on its way to 150.46. It's probably on its way to 176.04. I can't rule out that it's on its way to 204.27. This is strong. This is long and strong out here. This is an A to B equals CD pattern. This is coming off, this is the long-term one, from the 2008 low is your 8-point. The high out here is going to be March in 2015, a 0.382 retracement. So very strong indication right there. That was a retracement into January 2016. Pretty much been off to the races. And take a look at the strength of this move. This is the strongest piece of the move that we have seen inside Marriott. So the 1-to-1 level, okay, which was the 1-to-1 was 1108 to 85, and you just add that difference to the low of 56.43. That gives you the 130.35. That was a no-brainer as price started moving off of that C point. You're on the strong side out here. I don't know what your time frame horizon is with regard to when you got into the trade and, you know, should you take profits or whatever. That's going to be a personal decision. Do we see anything out here as we speak right now that suggests that this move is over? Nothing. Nada. Zilch. Zippo. I mean, nothing. Doesn't mean things can't change, you know, in the next moment. But at this moment, the moment I'm living in, the moment you're living in, this looks pretty good. This is one of those things where you let your winners run. Maybe you go ahead and you put in a trailing stop somewhere, just dependent upon where it is that you're in. But Marriott looks like this is a great-looking stock chart. So I just have to say, hey, kudos for getting into Marriott, and just be prudent. But I don't see any sell signal, and it looks to me like this little puppy wants to continue to move higher. So a nice trade there. Let's go to KJ's question. He says, Steve, I'm in Adobe, got it at 199. ADBE is the ticker symbol, ADBE. And does it have a shot to get to 216? So again, kind of a similar looking stock chart out here. I think we're going to see, you know, tons of these. Now, this is a weekly confirmed A to B equals CD. This week it hit its 1-to-1 target. And KJ, that was 203.84. There's absolutely, positively no reason for price to have to stop here. In fact, we would say the way that this came off of the C point out here on a weekly basis is way stronger than the way that Marriott made its move. So where should Adobe be headed to over the longer haul? We're going to get rid of the daily noise factor with regard to whether it pulls back a few bucks or whatever it might do tomorrow, next day. Longer term, this is where I want you to always wrap your head around, okay? Because the daily stuff is just a lot of minutia, okay? That's going to get you all screwed up here, and I don't want that to happen if you're looking at this as a longer-term holding. I don't know that to be the case. You're in at 199. No, you're in at 199. It's trading at 199. Okay. You're in kind of late on this game out here. So now you're really playing the momentum move inside of Adobe. See, that's a more difficult thing. But I can tell you, just looking at this longer-term chart, that Adobe ought to make its way to 220, 240 out here. Let me take a look. Let me throw it up on this my other system, ADBE, see if there's anything. So, you know, KJ, that's just a more difficult one to answer for me. Do I see a topping pattern just yet? I don't, but I wish that inside of Adobe, you know, you would have gotten in at a sooner date out here. The only thing that I can share with you right now is Adobe has support probably at 191.07. If 198.21 doesn't hold. But that's not going to help you out a whole lot. Longer term, this is headed higher. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So flat market in the S&P, well, in the Dow. S&P's up 6, NASDAQ's up 56, Russell's up 4. Semis are up 7 points out there. You know, Wilshire 5000's up 0.25%. The trannies are down just a bit, about 0.3%. Off 37 bucks out there. No questions that I have, and really I do appreciate each of you that take the time to go ahead and either post something into the den, call, most certainly. Always love to hear a voice out there, and or write in. Now, sometimes because of the ISPs that you use or I use, sometimes those questions don't come in until after 2 o'clock, and we try to get those the next day. I try to remember to write it down on a little pad of paper and make sure that I look at it, but you can always resend something in. As far as what to do now with no real questions in place out here, I guess we just simply, you know, I know the question on many people's minds in this vertical market are, you know, can this thing pull back? And we know the absolute answer is yes, it can. You know, but here's the issue. Basically, very few of us, okay, myself included, have a great track record. Experience is the right word, not track record. We don't have. Vertical markets don't take place all that often for us to really know the trading tactics involved there. There are many patterns that show that there should be some topping signals that are, you know, some warning signs out there. One of them is the spot volatility index. You've looked at this for the last 4, 5, 6 days, however long it's been. It's been since trading day of January 16th. When the spot volatility index got above Stevie's 50-day exponential moving average, okay? And many of you, for years and years and years, have been taking a look at that line, and you say, hey, that's where the most carnage can be done in the market. Have we seen any carnage in the S&P 500? That's the market that the spot volatility index is dealing with out there, and the answer is no, none, zippo. And it just keeps ignoring it. Why does it ignore it? Well, it ignores it because we're in a vertical market, and money is coming in from all over the world because of the breakouts that are going in. We don't have the breakout inside gold in all currencies out there, or the major currencies. Major currencies being the yen, the pound, the euro out there, okay? And obviously those three make up a big portion of the U.S. dollar index, but you can't forget the loonie. right? You can't forget the Canadian dollar. You can't forget the Swedish krona, the Swiss franc out there. You can forget them if you want, but so that's why you're in a vertical market, and money that's just flush. This is the markets. These are the markets that are breaking. I know everybody's talking, or many people are talking about emerging markets, and they have kind of their own break, but not all the money around the world is flowing there as much as it is here. And so these patterns that are present, I'm looking at a screen here that shows potential topping signals in the Wilshire 5000, the XAU, we already talked about that, the New York Stock Exchange, the Russell 2000, and the S&P 500. But I'm not even going to spend time showing you these patterns because we don't have any kind of confirmation. It's just the potential. It's the type of patterns that you'd like to see out here. But we have to come back to the fact that we are in a vertical market. Now, vertical markets typically do have some type of wild move to the downside. More than 5%, 9% or something like that. And at that stage, I can guarantee you, everybody is going to be saying, Steve-O, you're wrong about the 30,740, or you're wrong about the 8,500 inside the NASDAQ 100. And I will say, maybe I am. But I'll tell you what I'll be doing. I'll be looking for that 8 or 9 or 10% correction, the pattern associated, and coming in full guns a-blazing, because we're talking about now when we're neutral with regard to, or just anticipating what can happen. But what do you do now? What do you do now in these vertical markets out here, right? That's why my newsletter service covers long-term, right? So it's just long-term and intermediate term. And long-term for the S&P 500, it's been bullish ever since we started putting that signal in there back in March of last year. And that means you don't take your long-term 401k money out here and try to day trade it and swing trade it. You've got to stay with that long position out there. Now, we switched to long-term with regard to gold out there, so we're committed to that until that signal fails. And we're long-term bearish the bonds out there. So you kind of have those three general areas to conduct your typical portfolio. If a wealth manager was managing your funds, depending on your age, I could tell you pretty much the mix that they're going to suggest out there. Do I believe in that mix? That's something we'll talk about at my workshop, because subscribers have asked that question. So I will provide to them that information, which I can, and show them my portfolio mix, or most of that portfolio mix. It's different than these ETFs that we are taking a look at out here, somewhat different than some of those ETFs. So, and that's, by the way, that's not this Wednesday. That's next Wednesday. It's just for subscribers. You know the routine and the deal there. If you'd like to get access to it, you just have to subscribe to the newsletter out there. But so there are these different patterns that are present. I know in your mind that sometimes you might think, hey, he's going to just say, there's just no way that this market, well, that's going to go down. But here's an interesting signal with regard to that spot vol. The rate of change. This is a 10-day rate of change inside of the spot volatility index. And when that rate of change, I have it simply at the 40% level. Okay, we didn't get to 40%. We got up to 33.55. I think that was the number. And 40% was somewhat arbitrary, just by looking at other bottoms in the market, right? Because you like to be able to spot a good bottom out here. And so you're looking for these bottoms in the market. And when do those typically occur out here? And it's when that rate of change over the 10-day period gets close to 40, or does get above 40. We didn't get there, but here's the deal. You got a close enough signal that says that on January 18th, 2018, inside the S&P 500, that was another good bottom. Yeah, I know. These might be like the best signals out here during this vertical market that we are in. So anyways, I just kind of am going on and on here, but let me see. Was there some message here? It says NDX 6965 up 60, long-term Fibonacci expansion of 7300, likely acting now as a magnet. So in the NDX, and what that, just for those that, well, I didn't really read it that well, but we can pretty much put this together out here. Let's just put up a new chart. Let's go to a longer term. Let's just see what I can come up with here. Let's just do that. Let's go to the NDX. Let's put this thing on a quarterly basis, right? So let's get some quarterly numbers, going to make those swings a bit easier. And I don't know where, if I just simply, here's what I would be looking at as far as expansions. I'd be coming from the high in 2000 down to the low in, where is this? The low in, because I like the long term, 2002. And so is that what, yeah, I think that's what you were looking at, right? And if it's not, because maybe it's not, maybe it is. But the reality is, so the next kind of projected level, I think this is the same thing you were saying, Z, when you wrote in there. Here's the 73 or 73.01, if I've grabbed the exact points. It doesn't really matter as far as the next target line for the NDX. So, yeah, but you know, my bigger take with regard to the NDX is this pattern. And this pattern is the consolidation. And this is the one that takes us into the 8,000 arena. You know, 8,000 arena for the NDX 100. Will it be 73.01? Is that the end? Doubt it. I like 8,800 or higher. Steve Rhodes from TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So Kevin wrote back in. He said, "Dollar question mark. I thought the markets are still about the yen." He was referring to the gold market, and you must have missed that show when we decided that there was no longer the yen correlation to gold. And that was that's within the past couple of weeks out here. My recollection. This chart here just simply proves that point. The bottom panel is yen futures. Now there used to be a direct correlation between bonds, the yen. Well, the yen and bonds, and the yen and gold, or all three of them basically moved in the same direction out there. It was a dance step that you guys were very familiar with, directional dance step out here. When we take a look at this right now, you take a look at the yen, that correlation is basically, is gone. Any correlation that's out there just seems to be more of a coincidence these days than it does something that you're going to go ahead and drive your decision on. Go ahead and use it if you want. I didn't tell you Steve-O is just looks at it, but that's basically about it. It just, I will say this, used to be an influencing factor. It's no longer an influencing factor to me. Closer, though, the U.S. dollar index. I put it in that other chart out there, but the U.S. dollar index is a bit, and there's really more to it than that. And so I'm not going to go into that, but subscribers know what it is that we're looking at. Phil writes in with regard to vertical markets, and Phil, I apologize, it's on my phone. I can't really read everything out here, and but it says is overbought a problem and tries to identify. And there's been a lot of discussion out there. With regard to the RSI being, up at these heights or what have you. It depends on what time frame you're looking at. This, just so we can get all the data, or all the data that Steve-O's got. The S&P takes you back to 1970 out here. The bottom indicator is relative strength reading. On a quarterly basis, the strongest reading came in at 96 in April of 1998. We're at 85. And the question is, did April of 1998 identify a top? Hell no. The RSI up at highs is never a problem. It's never where the market tops. The issue is always, after some point in time, does the market go higher with a lower relative strength indicator? That's the problem. But no problems today, folks. Stay tuned. Your favorite polar bear, David White, he's up next after that. Tom O'Brien, 3 to 5. Andy Heck from 5 to 6. And I'll be back with you tomorrow at 1 o'clock on Wonderful Wednesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.